Good afternoon. It's great to be here. I'll introduce myself first, and then my co-presenter. My name is Christine Robson, and I work at Deloitte Canada in the Financial Services Strategy Group. And my co-presenter is Matt Thompson, who is in charge of all things identity at Capital One. I think that's more or less right. So I'll start by reading the back of the box for you. The views that I present are those of Deloitte and the World Economic Forum. The views that Matt presents are those of Capital One. So if you hear something that you love or something that you hate during our presentation, you'll know who to take that up with. So I started my exploration of the world of identity in slightly a different place than I think many of the people in this room would have. So I started from the world of financial services, and back in about 2014, 2015, Deloitte and the World Economic Forum set about to explore the world of disruptive innovation in financial services. And this was the height of the fintech boom. There were a lot of changes happening in the industry that nobody really understood. And so we were asked to go out and look at the world of disruptive change and tell everyone what was going on, which is obviously a very small and very easy ask. And so we built a consolidated framework for disruptive innovation in financial services, and this was really the first consolidated look at all the changes that were happening in financial services. But as we looked at this vast topic, as we looked at this framework, there was one trend that we really couldn't get to fit, no matter how hard we tried, and that was digital identity. Because digital identity wasn't just a trend, it was something that was really foundational to every single innovation that we saw happening elsewhere in the market. Everywhere we looked, we saw innovators, and it wasn't just new fintechs, it was also folks inside incumbent institutions who wanted to build these cool, sleek new digital products. But they always said identity is the stumbling block. Identity is what forces us to go from the digital world back into the physical world. And so what these innovators had to do was either rely on sort of the classic physical identity systems that we have always relied on in the past, or they had to rely on partnerships with other institutions, so piggybacking onto identity verification systems that already existed. So this realization started the next year of work that Deloitte and the World Economic Forum did together, which was looking at a blueprint for digital identity. So what should a blueprint for digital identity look like, and what role did financial institutions have to play in that? And so we took a few steps back from the sort of sociological definition of what is identity, because yes, identity is a set of attributes, yes, it's a collection of attestations about you, but what it really means in the context of financial services is it's a way of transacting. An identity system is what allows you to perform transactions, financial and otherwise, in the world. And identity systems are not new. We've had them for hundreds of years, but things are really starting to fall apart. So I'll start with an example I'm sure all of you are very well aware of. So Target, back in December of 2013, experienced a data breach that exposed over 70 million customers. I'm Canadian, so I tend to scale things. 70 million customers is about 2 Canadas, so that's pretty significant. And they ultimately had to pay over $100 million in legal fees, in fines, and I would say, not more importantly, because that's a lot of money, but just as importantly, a huge loss of customer trust. And on a slightly more whimsical note, back in 2008 in Michigan, a 33-year-old woman posed as her own daughter to rejoin the high school cheerleading squad, and I guess relive the glory days. I guess some people just can't get enough high school. But now let's move on to a slide that causes cringing in a lot of rooms around the world that I've shown this in. This shouldn't be surprising. No identity, bad identity creates a lot of very serious problems for people and institutions. There are a lot of big numbers on this slide, but we have to keep in mind the small number, which is 1, the individuals who are impacted by identity theft and identity fraud. This can be really very painful and even devastating for those involved. So whether it's the individual person or the big institution, I think we're all on the same team. We're all cheerleaders. We're all rooting for better identity systems. So what does identity look like today? Looks kind of like this. And so we've had identity systems, as I said, for many hundreds of years. And let's be honest, this system has never really been perfect. We've always had identity theft. We've always had identity fraud. I could ask for a show of hands for anyone who used a fake ID in college. I won't do that because I don't want to implicate myself, but I think you know who you are. But in the pre-digital age, these problems were always manageable. Not anymore. And as we all know, the internet was constructed without really a layer for identity management. It was built for computer-to-computer connection, not person-to-person connection. And so, as we all know on the internet, no one knows you're a dog. That was back in the 1990s, and in the last 15, 20 years, we haven't really made much of an effort at fixing these problems. So we still have this sort of wild, wild west out there on the internet where everybody is their own identity provider, everyone is their own relying party. And so this creates a big problem, this unstructured way of looking at identity, because if you're a relying party, it's very expensive for you to operate in this way. So if you look at banks, for example, over 50% of all their customer acquisition costs are related to identity. It's identity-related compliance. It's frustrating for users who have to juggle sort of now a digital bulging wallet full of cards and credentials. And as an identity provider on the internet, it's a role that you might not necessarily want. It's one you've sort of been forced into. And it really puts a target on your back because you're handling a lot of very sensitive information, a lot of valuable information, and you might not have the right systems to protect it. To give you some numbers, so in 2016, for the first time, the amount of people who transact primarily on a mobile device for banking surpassed for the first time those who transact mostly in the branch. So we're moving from physical banking to digital banking. If you look at an area like retail, 11% of all retail transaction will be e-commerce within the next 1 to 2 years. And 11% is not that much, but in the US retail market, that's hundreds of billions of dollars. So these are big numbers. There's a lot of value in this data on the internet. And so, in 2010, on the internet, anyone can fool us in thinking that they are your dog. I don't know where Matt got this picture. I won't ask. But the upside of cyber theft, of cybercrime, of identity theft, of identity fraud is higher than ever before. It's a serious problem, and it's getting worse. We just heard a lot in the keynote about the Internet of Things. So we're now moving into a world where you will have millions of devices connected all the time. We're producing more data than ever before. We're consuming more data than ever before, and we're not protecting it very well. So this is where digital identity comes in, and it's a solution that should allow us to cut through the costs, cut through the insecurities of the current system, move past this wild, wild west of just handing out your credentials to anybody who asks for them and creating new credentials at a moment's notice, moving to a system where you hand out credentials to the people who need to access them, when and how they need to access them, and moving from this unstructured, dangerous system to protected and controlled identity. So I think as the previous presenter mentioned, there are a lot of models of digital identity that exist in the world today. Digital identity is certainly not a brand new concept. I've just put a very few up here because if I put all of them, this slide would be way too cluttered and you couldn't read it. But ranging from Secure Key in Canada, e-Estonia, the South African Social Security Agency in South Africa, to Aadhaar, there are many systems that exist in the world today. So going from Aadhaar, which has been getting a lot of attention in the media lately, the world's largest financial inclusion project, delivering identity to over 1 billion people, to the bank ID system in Norway, so a consortium of financial institutions who offer access to public and private services for a variety of individuals. I think in Norway, you can actually get divorced online in about 2 minutes. So if you have a Norwegian spouse, I wouldn't send them too many texts about not taking out the garbage often enough. So these systems all look different, and the reason is that they were built to serve different problems. They were built with different goals in mind. There is no one-size-fits-all for identity. But we can provide a few guiding principles of what an ideal system should look like. So it should be a social good. It should be built to deliver the maximum value to the maximum number of people. It should be privacy enhancing. And so it ensures that users only release the information that is needed to perform a transaction, as opposed to just throwing out a credential and letting the relying party take from it what they need. The system should be user-centric, so put control of identity back with users where it belongs. Viable and sustainable means that it's not something that's really at the whim of shifting political priorities. Once built, it will stay in place. That gives people confidence and the ability to build on top of it, trust that it will still be there. And finally, it should be open and flexible, so built on open standards and built to scale across new services, across new users. Because I think that once you build a system like this, you can't always predict what will be built on top of it. So having it be open to those to scaling and changes is very important. And so, again, I think the previous presenter had some questions of, okay, so why haven't we done this already if we all sort of know that it has to happen? That's because identity isn't just one problem. It's really a set of problems. It's a multi-layered problem, and it needs a multi-layered solution to bring it all together. And so if you look at pieces like standards and pieces like authentication, those are all incredibly important, they're all incredibly valuable, but in order to actually have an identity system that works, you have to bring all those things together. And who is well positioned to do that? Well, it's financial institutions. And there's a set of reasons why this is. So starting with some structural reasons. First of all, banks are already stores of customer attributes. More importantly, they're stores of verified customer attributes. And so banks already have to collect this information for their own purposes. So for them, becoming identity providers is a small step, whereas other institutions who want to do this might have to start from much closer to ground zero or start from square one. FIs have proven executional ability. So if you think about being able to use your credit card anywhere in the world, that's a standard that was put in place by financial institutions and adopted worldwide. And so you can imagine putting an identity transaction with a financial transaction and running identity proofing through the same rails as payments. User coverage. So financial institutions in developed economies have coverage over the vast majority of individuals, which obviously gives them the leg up in providing identity across these groups as well. And they have multi-jurisdictional operations. And so with identity, the sort of holy grail is a global system for digital identity, and financial institutions do have those global links that position them very well. And then 3 additional and extremely important reasons. Financial institutions are very rigorously regulated, which increases trust among consumers and among governments. As I mentioned before, financial institutions are already established intermediaries in many transactions. And so again, adding an identity transaction on top of a payments transaction is not that far of a step. And thirdly, they're trusted as safe repositories of information and assets. And so if you look at research that's been done on this topic around the world, almost universally, financial institutions are trusted more than other types of providers, including governments, to hold people's information and assets. So that's why we should want financial institutions to do this, but why should they want to do it? I have 4 main reasons here. The first is to improve current state processes. So you can cut costs associated with things like onboarding of customers, adjudication of different files, things like creditworthiness. And you can also improve the customer experience, so remove friction and deliver more tailored products and services. The second reason is to maintain a relationship with the customer in a disrupted market. And so with all the fintech activity that's happening these days, the battle for the customer and ownership of the customer interface is deeply contested. And I've spoken with an identity manager at a European bank where I think the ecosystem around this is a bit more developed. And she said, we think that in the future, identity will be the only point of touch we have left with the customer. In the same vein, new regulations, especially in Europe, like PSD2, like MiFID, are coming out, and they're really pushing institutions towards this platform banking model as opposed to a traditionally vertically integrated model that we're used to. Identity will be incredibly important in that platform-based world, and somebody has to do it. And the last thing is new business models based on existing capabilities. So banks currently make money off financial services, but they could easily sell identity and trust beside those services. So to recap, cut costs, improve engagement with this sea of sort of terrifying looking customers, manage the platform-based world that's being driven by regulation and other trends, and build new business models based on identity. So I think it's the priority here for financial institutions is not to miss the boat, because as I've said, financial institutions do have a leg up. They have a head start on this in this race of building digital identity, but they're definitely not the only people who can do it. And if you look around the world, you'll see a lot of programs driven by financial institutions, but you can also see places where other institutions have stepped up and have taken over this role as identity providers. And so I think it's very exciting to see a lot of faces around and hear a lot about what financial institutions are actually doing to drive these systems forward. And with that, I'm going to pass it off to Matt, who can tell us exactly how Capital One is capitalizing on these opportunities. Or not exactly how, but he'll give us the broad strokes.
Yeah, thanks, Christine. So Capital One has been a pioneer in a number of areas with digital innovation, one of which was our open banking platform, which we pioneered about a year and a half ago at South by Southwest. And really the thing that we noticed was our customers' expectations about engaging with their banking relationship across different types of platforms and products and expanding their financial footprint into other areas that weren't traditionally managed by the bank. A lot of the fintech companies that have stood up to provide different innovative products and services. And so what has been central to that is building a platform that enables us to extend those trusted interactions with our customers on all of these different types of applications, different devices, such as Alexa and the skill that we built there. But as you think about how we enable and extend those trusted interactions of our customers and protect them in doing that, it's really through identity. And so identity has been core to our external initiatives as a company, and it's really foundational around these three core products that we have externalized and recently made available to business partners through a beta program. And the three are around trusted registration, identity verification, strong authentication. So one of the recognitions we have as an organization is that we have put tens of millions of customers through high-friction processes to establish their identity and then continuously manage that identity, gaining more trust over time with every new interaction that we have across different devices. And so we wanted to provide that as an enabling factor for our customers and our business partners by giving our customers the ability to port that trusted identity outside of Capital One applications. So as our partnerships expand, we're looking for ways to create safer, more trusted interactions with our customers, because some of the actions that we were observing where third parties were collecting credentials, banking credentials of our customers, storing those, and then screen scraping their accounts, we didn't think that was the right answer to how to protect our customers. So by extending some of these identity solutions into the broader ecosystem, allowing for more transparent and secure ways of sharing identity information of our customers, that would be a better solution and kind of lift all of the trust and help enable the future of commerce for our customers. So I will stop there because we're at time, but I did want to take a minute or two for any questions. Thank you. Did you want to?
Well, this is all very exciting and fascinating. What's been the take rate on this?
Say again?
What's been the take rate on this API service that you're providing?
The date range?
Take rate.
Take rate. Oh, we just launched beta access. And as far as take rate, are you talking about customers using their bank identity to authenticate to third-party sites, or businesses that are interested in consuming our digital identity solutions?
The latter.
Okay, so again, we just launched this last month and access to our APIs. And while it says beta, I want to make it clear that this is the underlying technology we use to verify our customer's identity and perform billions of authentications a year. So the technology isn't beta. The fact that we're externalizing it is the beta aspect of it. But we're currently integrating with a number of business partners that want to leverage us. So we haven't put anything into production yet. I anticipate that happening certainly before the end of this calendar year. But right now we're just engaging, so I don't have any metrics. Next year, hopefully I'll have some compelling metrics to share. But a lot of interest from businesses in this.
When you look at this compared with other social identity platforms like Facebook,
yeah,
which externalized this a couple of years back, how do you
Sure.
see differentiating with them, and what value you think you can offer that they don't?
Yeah, I'm not going to speak specifically to Facebook, but I'll speak to social logins generally, okay? Just to be respectful of Facebook Connect. But I would say one of the recognitions that business has around a bank identity versus a social identity is that we have gone through customer due diligence and have verified the identity associated with these credentials. And again, I think that's the value add, is the fact that businesses can trust and rely on the fact that there's a real person associated with their bank identity versus some of the social credentials, which, you know, your dog, for instance, could have a social account. And many of you may have dogs that have accounts, and that's not something that people are going to rely on as much as, say, an identity attestation from a financial institution.
How do you figure out how to model risk and liability?
Yeah, so the liability, as my friend Bob from HSBC pointed out earlier, Dan, you know, I think that's something that we're still trying to determine. but we're looking certainly at our history as a payments company and looking at the models that we have around liability there. We're looking to the great work that's being done in the Commonwealth of Virginia around the digital identity law and trying to figure out how to leverage some of the work they've been doing to limit liability for identity providers as we, blaze a trail here in the U.S. among financial institutions, at least in becoming one. But as far as, and I think, I can't remember who the person was that asked about how you manage the risk aspect by enabling more endpoints where fraudsters or attackers can essentially attack your credentials and try to gain access in a Capital One account. And we leverage our risk APIs externally as well as we do internally, and we think that we've put a lot of effort into that, and it gives us more intelligence as people are banging up against these identity APIs external to just our applications. So we look at the fraud aspect from two directions. One, we should have best-in-class fraud protection, but also we look at the way that a lot of organizations are collecting bank credentials today and storing those in a less secure manner than the banks do, and doing things with them that the customers aren't exactly knowledgeable about being done. And we think that that's a better way to protect customers as well.
So a question for Christine. One of the value propositions you had on a slide related to FIs in terms of sharing verified attributes is that the FIs have huge amounts of coverage. The challenge actually appears to be that most banks actually tend to operate in about the 50 to 100 million identity kind of range as individual institutions. And this creates a major problem in terms of coverage for being able to share that information. The fact that in aggregate they might potentially cover a much larger collection doesn't actually turn out to be very useful in practice unless they actually operate in concert or in a shared fashion. And are you seeing anything that actually indicates that we have a model that would support that?
So I think that the coverage point is an excellent one, and if you look at different jurisdictions around the world, the degree of coverage really does vary. So if you look at a jurisdiction like Canada, like Australia, like Israel, with the top 3 to 5 banks, you get about 90% coverage. If you look at other places like the US, quite a bit more scattered. And so from the perspective of identity, a place like Canada or Israel or Australia, the financial sector is sort of purpose-built to be an identity provider because they have the degree of coverage as long as you say, they work in concert. So I think that's where you'll see some areas where it can be a single institution who acts as the provider. In some areas like Canada, you'll see that it's a federated model due to the degree of coverage. And I think there's a difference in models where some institutions see that there's possibly competitive advantage in being the identity providers. They will try and build their solution, then scale outwards and build coverage based on the identity service, whereas others will act more in concert as a federated system and rely on the coverage they already have. So I think different models for different situations and based on different strategies, but we've definitely seen areas where all those models are in place.
And just my additional comment on that is that, somebody's got to start. And so I think, again, Capital One has a history of digital innovation, and so we just wanted to get this market started in the U.S., and so that's why we're open for business.
Have we got one more question?
Yeah, we're seeing tenancy-based identity to kind of represent organizational structures of identity being really important in the kind of the B2B space especially. Do you kind of view the service more as kind of a direct-to-customer kind of identity service, or how would the interplay work kind of with more of a tenancy-based organization consumption of identity? Any concept or ideas there?
We're focused on kind of B2B2C type use cases. So we're providing this to businesses that have a need for trust in their customers, and they're offering. We don't have a direct-to-consumer offering with identity outside of the fact that we've issued them a digital identity that we manage for them. I'm not sure I understand your question outside of that context unless that answered it. But.
Yeah, more like for organizations. This is really known for large-scale organizations as their customer identity.
Yes. Well, we're agnostic to the size of the organization. We're partnering with smaller providers, identity networks. But again, we're exploring multiple different types of business relationships right now and are not closed off to any one. Thanks. Thank you.